I love it. When I press that button, I start getting chills, baby. This is your live stream. If you're watching this at a later time, enjoy the show. We have a packed full of knowledge and information right here, right now. And while we let everybody join on in, I'll give you the itinerary, if you would please. We got interest rates with Jerome Powell. And then, of course, we have the economic calendar, what we have upcoming in this week, what volatility is going to peer its head through this market. Of course, earnings. We still have some earnings lined up, not the biggest names out there, but we do have a few that you need to keep an eye on. And then, of course, we have our ETF and SPY review. I'm going to keep it short there. We're going to take a little peeky gander at the yucky charts, and then I'll give you exactly what's hot, what's not, and then we'll keep on keeping on. Then, of course, we're going to look at Beef Stew's Twitter account. And speaking of Twitter, it's now called X for all you oldies that aren't calling it X yet, me. You need to get a Twitter account or an X account, excuse me. You need to get an X account. We're going to start doing some more meetings on X. I think it's an enjoyable experience. I've used it a few times, but we're going to try and do our own space on there. So if you don't have an X account, make an X account and follow the people in front of you. We got about 2 minutes. Let everybody join on in. I should bring up the chat here. What's going on? Zamora's already in here. Dan, Bob, what's going on? And of course, the beefiest of stews, the B, Stewie. It's good to have you in here. Now, guys, I know when we pull back like this, everybody gets a little afraid. You start seeing people disappear. They drop out of your lives. And that's why trading is so lonely. You show your head. If you don't show up and you do not make it pronounced that you are going to read, you are going to study, and you're going to work your butt off at this, you're going to see a lot of people come and go. But if you're the one studying, you're going to see those people come and go, and you're going to be right here with me, studying each and every day, looking over charts, and waiting for the right moment. Now, we only have about 1 more minute to go, and I tell you what, it's going to be a doozy. I promise you that. Let's go ahead and get this baby started. Welcome to the show, ladies and gentlemen. My name is David Worrell. I've been trading for quite some time now, and I have processed my whole journey right here on YouTube, for the most of it, for the most part of it. So enjoy the show. If you have any questions, just ask them in the comment section. And of course, if you want to join any of that, we have a link tree. We got a link tree to our Facebook, our Twitter accounts, everything that you need to know. If you want to join our Discord, it's all free, folks. Take advantage of it. Join yourself. Surround yourself with community, because trading can be lonely. It does not have to be. So first thing we're going to do is we are going to look at these beautiful interest rates. Yes, there has been a slight change, and of course I want to go over it. But first, let me hit you with the interest rates with Jerome Powell.
Oh, yeah.
All right, so check it out. We got March 25th. This is our, March 19th, 2025. This is our next Fed meeting. We are at a rate stay still here. Same for May. Now it looks like we have an increased opportunity in May for a quarter of a rate cut. But here's what the biggest change is we started to see some action in June where we might get that quarter of a rate cut point. Of a rate cut rather than July was a possible. Now June is looking like we are more on the expected side to cut a quarter of a point. So you guys can see the expectancy of a rate cut is becoming closer and closer rather than further and further away, which is a good sign. As you can see here in July, it's almost looking like we could be down to a half a rate cut point. And if we jump all the way to December now, you can see we are looking more on the likelihood of 3 cuts. So we were looking more on the likelihood, last week when we talked about this too, but it's becoming more and more pronounced that we are more likely going to have those 3 cuts, okay? So just keep that in mind. It's always important to keep in mind that the interest rates are being cut. We're lowering. There's no expectancy to let them stay where they're at longer or even increase, because the second we start to see news and social sentiment in that direction, it's going to be a lot harder to trade. We're going to have a lot more issues. What's up, Joseph? It's good to see you, brother. All right. So that is your Fed tool watch. We're still looking at 3 interest rate cuts, and the first cut is looking like it will happen in June. At least we are at a higher expectancy to be at least a quarter of a rate cut in June. So that's good news. What's up, Loke? Loke Doctor, what's going on? Yeah, it's good. I'm glad you made it. Now let's go over this economic calendar. Not as volatile as last week. You guys know we had a lot of very important information coming in, as well as Powell. Old Papa Powell decided to speak yesterday. I'm sorry, not yesterday, but last week. And it was very volatile to say the least. And you can see here we have job openings. That's going to be on Tuesday. Wednesday is your CPI. So consumer price index is what CPI stands for. This is very important. This is a big piece of information the Fed will use to rather increase or decrease those interest rates in order to sustain high jobs and they're two mandates. So then we also have Thursday, which is initial jobless claims and PPI, both very volatile. So just keep in mind, usually the data in market time, we'll always talk about market time, but in market time, the biggest data comes out around 8:30. What's up, Saeed? It's good to see you. Good to see you. So yeah, this is our economic calendar. Not, like I said, not as crazy as last week, but you still need to keep an eye and understand that core CPI and CPI is going to be very important, as well as initial jobless claims, because if we get one number swaying really far outside the forecast, you're going to see a lot more volatility coming in there. So that is what we have for that. Now, of course, we have been using X for quite some time now. We actually use X to go over your, we use Earnings Whisperer to go over your most anticipating earnings releases for each week. Also, if you don't have an X account, get an X account. We're going to start doing some spaces on X. We're going to try and reach out to more people on X. We're starting to enjoy it. I think all of us like X, and we're starting to use it more and more. So get yourself an account. You can just do it just for the show if you want to, and we'll do a space hopefully on Wednesday if everything goes smooth. We'll go nice and easy. Last Wednesday was canceled. I was sick. I'm glad I didn't have a flu, but it was bad. I'm sure you can hear the residuals. But here on Earnings Whisperer through X, you can see here we got a lot more of the biotechs still coming through. So a lot more biotech still. This is our red wire. We played this last month at some point in time. RDW, they have their earnings coming up now as well. Oracle is going to be a big one, definitely. So keep an eye out for Oracle. Kohl's, Dick's, let's see, Casey, Groupon. Groupon still has a ticker? Okay. I don't know. I just don't know how they make so much money. Maybe advertisement on their thing. We also have Zim, ZIM, Robot, IRBT, Magnachip, Sprankles. That's actually Sprankler. You got a couple, Vera Bradley. Here's a good one, Adobe. That's going to be a good one right there. American Eagle Outfitters, one to keep an eye on. Now, Dollar General, I tell you what, when it comes to Dollar General, I seen a Dollar General market the other day, which is the first time I seen that, and I just want to look at Dollar General really quick. They have been on a horrible downtrend for a long time now. Definitely might be something we want to keep an eye on if they ever start to turn around here. It's crazy. Their earnings per share just keeps on getting knocked down. But anyway, back to the task at hand, folks. We still have plenty of earnings coming up. Just make sure, and the biggest reason why I want to point this out is because if you're in anything, you make sure the earnings aren't coming out this week in that stock, because if you're holding on to it and you're not already up a wild amount, this is a tough market to be in when, in fact, earnings may come out and just really kick you on the knee. Look, Doctor said when markets drop, my grandparents said to get into tobacco. Yes, not that any of them invested. It was just what was said. Yeah, actually, it's interesting that you said that because there is one tobacco stock that I was looking at. I can't remember the ticker right off the top of my head, but we might land on it today. But yeah, usually alcohol and tobacco, when the market starts to drop, a lot of people invest in that, which is very interesting. But understandable too. A lot of people are using a lot more of that stuff when they shouldn't be, when they don't have the money to. So Alvaretta, badly spelled, is a good sin stock. Look, Doc, maybe can you give me the ticker on that, Dan Bob, and we'll look that up in just a minute. That's funny. A sin stock, he calls it. Okay, so yeah, that's what I got for you on the Earnings Whisper. This is where I got it on X, which of course we're going to be doing an X space very, very soon here. Okay, so now let's do an ETF and SPY review. I won't keep this too crazy, but yeah, it's very important that we go over this. So
this is your ETF and S&P 500 review.
All right, folks, this is your S&P 500. Now, I'm still showing you the regression lines, the regression channels on here, because I don't want to just erase this. I want you guys to understand why I put these on here, why I had my final stay, my kind of, final countdown here before I lose all hope, right? And so I put these regression channels on here because this is the channel that we've been on. If you zoom out, you can really see, we've been on this for quite some time, quite some time. And I really like just using this as a reference to kind of understand, where we're at and what we're doing. And this is exactly what these regression channels are. Okay, so when we came down into this regression channel and just briefly broke it and headed higher, I had high hopes that we might have found a low. But of course, when we say things like that, that doesn't mean that it's time to buy. That just means that I have identified that we have hit the regression channel and an area of support, and we might head higher here. And we got a nice bounce. That's very nice to see. But until we see the new higher low stick and head higher, we don't want to bank any of our money on this area right here. We want to see what happens. And that's exactly what we did. We waited, folks. It touched that 50-day moving average and headed lower. We've been below this 21-day moving average now for quite some time. We've been out of the market. We haven't been buying. There's been nothing to buy because when the market pulls back, a lot of other things have pulled back. And I shouldn't say nothing. There's a lot. We'll go over it in just a minute. But there are still plenty of stocks that you could potentially buy in these pullbacks here, just like we talked about sin stocks, but also gold and silver. Gold miners right now are doing really well. So there's still some flight to safety stocks that some people use. So there is still some strength in the market, but the strength, a lot of it right now is in biotechs. As you guys have seen, we are starting to warm up to that. But actually, let me bring up this right here. This is your Spider ETFs. And let's just take a little peeky gander as to what is doing the best as the market continues to pull down. So we'll look at this in just a second. But I just want to note here, we're on a 200-day moving average. And if we look back in the previous, we have bounced off this 200-day moving average once, twice, 3 times, and will this be the 4th bounce? Okay. Now these bounces, you could say, oh well, it dipped below the 200. It dipped below. It bounced above the 200. I'm using this as a guide. Okay. This isn't a tell-all. This isn't a hey, it bounced exactly at this number. No, that's not charting. Okay. You have rounded numbers. This 200-day moving average. See how smooth it is? It's not jagged at all. It's to help calm your ass down, okay? This 200-day moving average has held 1, 2, 3, and now will it hold this 4th time? I have no idea, but what I will say is I am looking for a bounce in this area, and if this marks the low, then the new higher low will mark when I want to start getting my my toes wet in this market, okay? So right now I am hands off. I'm feeling good about being hands off. I'm happy to be hands off. When everybody's feeling all this pressure after we broke this 200-day moving average, folks, this is why we have a rule. This is not trending up if we're not above a 200-day moving average. It's in a short-term downtrend. Long-term uptrend, short-term downtrend, okay? We are momentum traders. We are swing traders. When we look at things like this, we want to see new higher lows. This was a new higher low from here. This broke that new higher low, so we got to start all over again. Let's see these new higher lows, and let's see continuation. Until we see that, I'm hands off the market, and we're just going to identify what our strong sectors are and what our leaders are. What is going on? Erica K in the building. What's going on? Good to see you. Good to see you. Okay, so this is the sector right here. And this is what happened on Friday. You can see energy has been getting some attention here and there, but we're getting some swings in energy. And I showed you guys that it's not looking strong. It's getting a lot of people interested for sure. You know, a lot of people interested. What's up, Anales? What's going on? Oh, Carl Burr's in the building too. What's going on? Good to see you guys. Sorry you snuck in there. I just seen Dan Bob say hello to you. I had to scroll up. What's going on, guys? It's good to see you. So energy, yeah, getting some attention, but let's look what's really going on as we are almost 9 days into this month. So let's look at these past 5 trading days. So ever since March started, it looks like we've been taking so many lefts. We've been begging for a right. We're getting our asses handed to us here. If you were in this market, the S&P 500 is taking the beating. We are not in our accounts because we're below 21-day moving average. Financials took the biggest hit this month so far, as it has been an outlier. It's been doing very, very good. Now let's just look at this past month. As you can see, consumer staples, that flight to safety this last month, the last 30 days when we were trading, our flight to safety is our consumer staples, our healthcare, and our real estate, even though real estate has been taking an absolute ass beating. But let's just look at year to date, okay? Just since we started this year, let's take a look at this. Now, technology and consumer discretionary has taken the absolute biggest hits. Now, we remember why and what took place with technology. We know technology had the deep view surprise. We can do this a lot cheaper than everybody's charging, and really took a hit on the tech. We've seen a big pullback in those sections. Consumer discretionary, we've seen big hits in a lot of different areas in consumer discretionary. But now, if we look at the positive side here, healthcare, we've been talking about healthcare, that bounce off that huge support on that daily time frame, and you can see it right here in healthcare, up still 8.51% this year. Now, there is positivity if we look at the year to date, but if we look at this past month, we've been taking an absolute beat down. So the question is, where is the bottom? That is what everybody wants to know. Now, before I start doing my charts and showing you my watch list, of course, I want to show you my boy, the beefiest of stews, your boy Beef Stewie's beautiful Twitter account.
Oh, I see you over there. You got problems? We've got the beef.
All right, this is your boy, the beefiest of stews, Beef Stew. You can follow him on Twitter. I'm going to keep calling it Twitter. I don't even really care. But I just posted his Twitter in our feed. You guys go give him a like, go give him a follow, whatever the hell it is. Just do it. Do it, baby, get it. Because the beefiest of stews has your beautiful charts. He is pointing, I mean, this is just an amazing area to be in. If you're looking at Beef Stew's charts, this is where you want to get when it comes to charting. Of course, I love to chart myself, but this man will even take and make a picture for each chart that he uses. And it's clean. It's clean, rub-a-dub-dub, like it, love it. This is MRX, so this is the way he posts these. You can see new higher lows on MRX. You can see the average daily range here is significant enough where we want to take interest in this. This is the man, the myth, the legend, the beefiest of stews. And then, of course, over here, you can see the earnings as it's gradually inclining. And he also gives you a few different understandings of this. As you can see, we have a beautiful uptrending line here. And you can also see where the support and resistance is right here. And then, of course, he's pointing out where he has took his anchored VWAP from the start of 2025. So the beginning of the year, he's landed his anchored VWAP, and you can see we have undercut and rallied here on MRX. So when I look at something like this, I go, wow, this is something I really, really like. This isn't something I'm just going to buy because the beefiest of stews put on here. I'm going to go to my charting. I'm going to see if I like this chart. So I go over here to MRX and I pull it up and I see, wow, the first thing I see when I pull this up on my charting is I see a huge area of resistance right here and support. So I just make a mark right here and I'm going to go, this is my area of resistance. Now this is just off first glance. I got $36.97, so we'll just say it's $37. And then we can come back over here and we can check on where his was. Look, $37.19. So what I see and what he sees is matching up. And this is a great way to help hone your skill in. You can use somebody that's been doing this for a long enough time where he can give you his thoughts, ideas, and opinions on a chart, and then give them to you in a way where you can understand them. Right now, he's showing where anchored VWAP is, the average daily range, the ticker symbol, the support and resistance. And what do we know when we have support and resistance? When we have a basing structure, we have an area of good risk reward that we could take for a potential reward, for a potential winner in the future. So you can chart side by side right here with the beefiest of stews. All you gotta do is give him a follow on that Twitter. Now, here's AVGO, so he's putting Broadcom out here. He's showing that we have the big gap up here, and we have the area of support and resistance, and we fell right back down right here to its area of support. So will this bounce off its area of support? Probably trading sideways in between the support and resistance for a while, but regardless, AVGO, keep an eye on it. So this is the beefiest of stews, and yeah, we're going to go over ASTS today. We got a few other ones that we're going to go over too. GRRR, this is a rip your face off kind of stock, but I just love the pictures. I love the animation. And guys, if you want good charting, and I can't say they're all good stocks because he likes to play some of those shit tickers, but STIM, this is looking promising as long as their revenue can start heading higher. But yeah, I'm telling you that he's got a lot of good stuff. Give him a follow, guys, definitely. And he will be in our Twitter space as well on Wednesday, baby. Oh, yeah, Wednesday, baby. All right, next. Oh, my mic. Next up, what we're going to do is we're going to go through some of my watch list. Now, when it comes to the ETF and SPY review, just because I didn't really nail it, there's not a lot going on in the sectors, but if you look at gold, gold is doing very, very well right now. Okay, we've talked about gold. We've talked about everything that's going on with gold, but still above a 10-day moving average on gold. Look at this rip tater chip. I mean, this gold is just kicking ass and taking names. So if you're in gold, congratulations to you as it continues to head higher. Lead Doctor fell. We have, if you check my link tree, which I'm sure will be posted, he's got Twitter, we're on Facebook, we're on it all, but we're just trying to really stand out on X a little bit more. So, okay, so biotech's also doing decent. That's definitely one we want to keep an eye on. Let me see here, guys. So technology is down, consumer discretionary down, hack down, XRT down. Now communications holding up better than the most, but still below a 50-day moving average. And I don't mean to sound negative here, guys. I'm just pointing it out. This is your consumer staples. Your consumer staples is doing good. Consumer staples is still hot, okay, which is your flight to safety. XLF was doing good, but now after this, it's below a 50, well below a 50. XBI, which is your biotech, it's showing that biotech is still bleeding out and well below a 200-day moving average. So I lied on that one, but is this its area of support? That's the real question. XLV, now healthcare. We talked about this bounce, guys, and look, it's still bouncing. The bounce is still bouncing. And you can see it held a new higher low here. And now it's above this area of resistance. So healthcare still looks like this thing is trending very, very well. So I'm sorry, not biotechs, but healthcare is doing well. It's the only outlier right now. So if you see a good healthcare stock that has proper earnings, maybe 25% EPS and 25% revenue growth, that's something to hold on to. That's definitely something to really take a peeky gander at, like HIMS. Now, HIMS is below a 50-day moving average, but I think, well, this was our previous leader. Let's take a look at our previous leader. It's not leading. Our previous leader is not leading, so we need to find new healthcare leaders so that way we can make the most out of our money, okay? So let's just go ahead and do our watch list. I got a few that I want to take a look at, and I know there's a few that I got a few from B Stewie when we were chatting on the sidelines there, but there's a few that I think you guys are going to definitely want to keep an eye on here. So let's just run through some of these. I know Bros was doing really good last week, now below a 50-day moving average. Bros was a leader. It's not leading anymore, so now we need to continue to watch for those leaders. Remember HWM? Now, HWM was definitely a leader last week. As we pulled back, it was still above a 21-day moving average. Now, it's at its regression channel below a 50-day moving average. So that's not looking so hot. Way. Remember Way? Guys, last week, Way was looking good. Not so much anymore. CNVS below a 50. HIMX is still holding above a 50-day moving average. This is still looking decent, and its financials looking like it's actually trying here. So HIMX, just something to keep an eye on, but not in a hot sector. TUYA. So this is your packaged software services, still doing really well. This is a very fast mover, so be careful with that, but it's one of those cheap ones that you guys might want to keep an eye on. AXGN, still below a 50-day moving average. Netflix fell off here, fell way off here, filled that gap, and is now, well, you know, it had that big soak on the bottom there on that daily time frame, but yeah, we're going to leave that alone. Remember AS? I still would like to see new higher lows on this. Net's also down. APP way down, but look at this. Now, I'm going to start showing you guys some leaders because look, SE, C Limited, this is internet retail, okay? A lot of your internet retail is not doing very well, but this is holding up nicely. So this is going to be one that I keep on the forefront. This is going to be on the top of the watch list. Also, look at Root. Remember our former leader, our continued leader now, Root, is still holding well above that 10-day moving average. What I don't like, guys, is this is getting choppy. Look how choppy this is getting now. I don't like it. Now, is this trending? Yes, it's trending. It looks good. The numbers are there to back it up, but it scares the shit out of me. It really does. Root scares me now. It does. But this is where the play was, guys. I talked about this. We had this $86 pinned. You know, I hit my alert 2 or 3 different times on it, and I waited so patiently. It got so damn tight right here, and it took off. It took off. I was kind of just not watching it. You know, I kind of just missed the boat. And you guys know I talked about this because it's a yearly breakout. A yearly breakout. This was just such a beautiful move. It had everything I needed, and it took off without me. Whatever. What are you going to do? So we're going to keep Root on the watch list and SE on the watch list. Let's take a look down here. SSRM. So this one has been, look at this beautiful trend. This is beautiful. 21-day moving average, holding very, very well. This is a mining company, so I'm assuming that this is probably precious metals. Yes, precious metals. You can see they're having some growth, constantly inclining on that quarterly. Annually, not so well, but quarterly is still going to look a little better. Excuse me. SSR Mining Incorporated is a gold company. It's gold. So right here, gold's trending. SSRM Mining is doing well. You know, this isn't probably the best stock to be in, and I say that because it had such a bad drop off over here. We're just looking to see, make sure it's not a China stock. But yeah, you can see this big drop off here. Not the prettiest thing, not something you want to be in, but it's definitely trending higher. It's got a high RS rating, and it's above a 21-day moving average in a market that doesn't want to hold up. So I'm going to keep that on my watch list. We also have INSM. This thing, oh, I scratched that, below a 50. SRAD, nope, below a 50. DOMH, if you guys remember we were watching this, it's still falling lower. AKRO. Now here's the one, WGS. This is another one that we want to keep on the top of our watch list because look how well WGS. Now, if you guys know, I like bases on top of bases. Well, this is a trend break on top of a trend break after an undercut and rally. This isn't a true undercut and rally. I'm trying to point it out that it filled this small gap right here, filled the gap, and then just took off. It just took off. It's got an RS rating of 99. It's doing very, very well to this. Very, very well in this market. So I really like this area. I'm just going to set an alert right here. Let me set it on this broker really quick. But yeah, WGS is looking really good. Here's your weekly time frame here. It's just trading sideways. We can get some inside days. That'd be great. But definitely keep WGS on your watch list, guys, because you never know. This holding up this well, if the overall market does start to turn around and does bounce off that 200-day moving average, this might be the stock that really gets to moving. It's got the financial, the EPS, and the sales numbers to back it up here. At least that's what my chart is showing. Let's look at PBI. Nope, that's pulled back to its anchored VWAP now. It's still above a 50-day moving average. Pitney Bowes, excuse me, it's still a little sick. Pitney Bowes, it's bouncing off this anchored VWAP right now, but we'll see what happens with it. Here's PM, Philip Morris International. Big rip up. They've got some numbers coming in. That's what you want. You want to see those numbers coming in. It's got a nice push higher. I'm not seeing anything above it. This thing's blue skies. And after a big push like this with numbers to back it up, this might be one that you want to keep on your watch list because it's doing really well against the market at a 92 RS rating. So let's see. Loke Doctor said, I'll probably jump on X this month anyway. Went to jump on the Facebook and IG. Nice. Yeah, I try not to, get on too many social medias. Obviously, I do the YouTube thing. I have to get my name out there. I have to do this. I got to do that. But I personally, I just don't get on there much. It's only really to kind of broadcast to get other people to join our group. But I don't sit on there. I get my own thoughts, my own opinions, and everything from the market, just me viewing it and then broadcasting it, trying to teach. But when I go to Facebook, I go on there to learn. And that's why I like Swing Trader Strategies is because the moderators on there always are posting awesome content. And anytime it comes up on my feed, on Swing Trader Strategies, anytime it pops up on my feed, there's always like a piece of facts about the future markets or about about the history of the markets or different ways that different companies earn their revenue. And I'm a nerd like that, guys. And if you can get behind that, just make sure you hit that subscribe button because it all starts here. We all started somewhere. We're all starting right here. And now I have friends that have been a part of this community for a while now. And they've ventured off and they're doing their own Facebooks, their own Twitter accounts. They're doing their own channels, their own Discords. It's amazing to watch everybody's growth. And that's what it really is all about is being a part of each and every person's journey, being a part of it. We're all one mycelium anyway. We all can learn from each other, whether it's good stuff or what not to do what not to do sometimes. But join up, guys. We have an awesome community. Hit that subscribe button. All right, let's look at some of the other former leaders, how they're holding up. NUTX not doing really well. OKTA, now, wow, this thing is really doing well. Technology, service, and package software. It's still showing good numbers and revenue. And I know this has been a fan favorite for a while. Provisions of identity management platform for enterprises that operates the United States and the international geographic segments. I don't know exactly what these guys do, but, package software. It's probably some good nerd stuff. San Francisco, California. So it is an American stock. OKTA, it's looking good here in this area, back to where where it was, but where it looks like we're downtrending in sales and downtrending in EPS, but still it's strong right now compared to the overall market. So we'll see how that forms. I know we were talking about grab last week, below a 50-day moving average now. Things change quick. Same thing, COMP, Compass, still trying to hold above that 21-day moving average. Still above a 50-day moving average, though. Compass package software, it's looking good. And keep that. I'm going to move that more towards the front. Now, of course, I still want to look at some of these leaders. HSAI, don't know too much about this, except for this is like auto parts, OEM, producer manufacturing. I don't know why. I have no idea why they're doing so well right now. Their numbers, they missed a lot of their revenue, a negative surprise, but it looks like their forward guidance is really what saved their ass on their earnings. So we're going to see, are they going to hold true to this because they have earnings coming up again? And I'm just interested to see what's going to happen here because last earnings, okay, they miss, right? They have a big miss. They have a surprise revenue beat, 13%, but they have a surprise earnings loss of 262%. And B. Stewie says China. Yeah. It is. So that's another thing that's moving up too that I forgot to mention in the ETF section is that it's not just gold, it's China. So be careful with those China stocks. This is one of those China stocks. Just like, we can look at BABA. BABA's a China stock doing very, very well right now. I wonder if is PDD doing well? Yeah, well, it's still below a 200-day moving average, so doing well short term, but long term, this thing's been getting its ass kicked. But yeah, China, you got to be careful. So HSAI, it is China. You can't really trust it. Same with BioStex, you can't really trust it. So I'm just going to delete this so I don't look at this again. PLTR, former leader, back down to this area of support. I'm sure there's going to be buyers here, buy the dip, sell the rip. But I can't get on board with this unless we have new higher lows here. If we did something like this, maybe a bounce, and then we hold like a low, like right here, and then start to bounce, I might buy like somewhere right here. Buy this area right here once we break up through. But that's just kind of a thought. I'm just watching things right now. I'm not, I'm in no rush. I'm in no rush right now to buy because the S&P 500 is below a 21-day moving average. This could be our rally day. But now we're waiting for a follow-through day, which happens 4 to 7 days after our rally day. Okay, so keep that in mind. And this is a piece of homework I'm going to use. I like Mike Webster. You more guys are more than welcome to subscribe to Mike Webster. And I'll put this in the Discord right now so you guys have a little homework after this for you guys to watch. And this is all on the follow-through day. Okay, it's very good. I also have my own video on the follow-through day, but I like for you guys to learn it from the source as well. Mikey Webster does an amazing job at that. So make sure after this you watch that video. We need to know what a follow-through day is. So what is a follow-through day? It's when we see higher than average volume 4 to 7 days after a rally day. So here is our first day. We are waiting 4 to 7 days to see a big spike in volume come in and push this market to the north side. Once we get that, that is when we start looking at the leaders that we have identified and seeing if we can take a hold and get some stocks. So I'm going to give you a few more here. We're going to be looking at the daily time frame on the bottom and the weekly time frame on the top. That's very important to know. I like the setup on the bottom, waiting for the setup on the top for VSEC. And we're going to be going through these pretty quick. And guys, once I get through these, which is about 10 more stocks, if you have any stocks that I have missed or I haven't said or you want me to go over it again, I don't care. Just let me know what it is, folks, and I'll be happy to go over it with you. So we have VSEC, VSEC. Look at this on the daily time frame. Excuse me. Sorry about the cough, guys. This daily time frame, this is a beautiful pennant. I love this. This is where I would want to see it break higher. This weekly time frame, it still needs some more time. But if it breaks out of this all-time high right here, definitely would like to be alerted. This would be our first sign. This would be our second sign that this would be a good take. AMRX, we also have this huge base on the weekly time frame. If AMRX, the pharmaceutical company, wants to continue higher, this would probably be a good place to go. China. This one's not China, but yeah, definitely HSAI is China. All right, EVER is another one I found. If we look at this on the daily time frame, you can see it looks kind of like that big cup and handle. You got these uptrend here. Got a big uptrend here, a big cup. Here's your handle. What I like mostly is this basing area right here. And if we look at it on the weekly time frame, this might have continuation. As you can see, we have an uptrend off of this bottom, this new higher low. This is what I'm seeing. We can continue higher or pull back and bounce off this area of support. Just watching ever. Now, this is a bank. As you guys know, financials are coming down with the rest of it. ACMR, this is holding that 10-day moving average very well. The weekly looks like it is into some resistance. Now, DC, this is another Dakota Gold. This is a gold stock. So if you're looking at gold, this might be something to keep an eye on. As if it breaks this area at 335, it has a big potential to move higher. We also have WBA. Now, I'm so sorry. Hang on. I'm still getting over this, guys. Just bear with me. So I don't really like these stocks at all, but I see that this has a nice curl here, and I'm just looking at this area right here. It still has a lot of proving to do. And you know what? I'm embarrassed to even kind of show you guys this. I'm just going to get rid of it. Don't even look at that. You guys remember TGTX? We've been talking about TGTX for a while. It just traded sideways. It's finally getting above all of this resistance area, making those new recent all-time highs. TGTX, you know, it might be on the next VERA. If you guys haven't looked at not VERA. Oh, no. I forget which stock it was. We also have Z-Lab. So I like Z-Lab coming up off these bottoms here. Drink, David? Yeah, you can hear it, man. Thanks, Dan Bob. Oh, man. Yeah, my throat is just so messed up. And we already went over BABA. This is DRD Gold, though. DRD Gold's actually really kicking ass. I don't know if this would be considered one of the leaders or not. But if you're looking for gold stocks, yeah, that's it, guys. Thank you. VRNA. Yes. Thank you, thank you, thank you. VRNA. You know, TGTX might be the next VRNA, but look at VRNA. This is the kind of stocks you want to be in. And we've identified 2 trend breakouts way down here, guys. Remember this? 2 trend breakouts using the 21-day moving average. You'd probably still be in the stock up until here. If you use the 30 and try to position into this thing, you'd still be in the stock. This thing just huge, still above a 21-day moving average. I mean, it's just, this is what you want to be a part of. This would be the easiest stock to hold on to, man. Easiest stock. VRNA is just beautiful. But we also have these gold stocks. I mean, you never know how long gold's going to be carrying on. I mean, we actually started talking about gold all the way back here, guys. Do you remember this? All the way back at 224. It's now at 268. Remember this basing area 1? I kept counting this out, you know, showing you guys that we've hit this area 1, 2, 3, 4, and it just kept getting higher, new higher lows, new higher lows, new higher lows. See how tight that got down here? You know, and if we zoom out even further, you'll see this also from a previous all-time high back in 2010, or I'm sorry, 2011, we were hitting those highs. This right here, this is when Russia invaded Ukraine, okay? Gold started to head much, much higher when Russia started to invade Ukraine. We had this big issue here, and it started to head higher, and then it started to fall off, holding those new higher lows off these bases, and then got really tight and broke out. We were here, I called this breakout, and once we got somewhere in this area, or this area, I started saying the social sentiment. Everybody was asking me about gold. I kept saying I don't want to be any part of this. You know, I don't want to be any part of gold anymore because now, you know, the average retail trader is asking me about gold. It's got to be time to be done, right? Wrong. Market doesn't care what I think or what anybody else thinks or anything that I've learned. If the market wants to go higher, it's going to go higher. I'm glad I didn't bet against it, but we also, you know, we have another basing breakout, another trending breakout. Is it going to set up again? If it is, you know, we got to keep an eye on DRD. Stocks like this. I mean, if it's getting ready to break this huge area, this huge yearly area of resistance, we want to be a part of this, folks. I mean, it's a big deal. So just keep that in mind. This also, DRD moves 4.5%. So it's one of my top watches for now. But just, you know, you got to keep in mind, there's other stocks out there. Just make sure that what you're watching it lines up with your ideas and your process. ASTS, I know this is one that B. Stewie was charting on his Twitter account, but ASTS is looking really nice. This is the new higher lows. I think one thing I didn't like with ASTS is the financials are just absolute dog doo-doo, folks. So just know what you're getting into. We're above all the anchored VWAPs. The RS rating is 99. It's looking really good, but it's just doo-doo. It's not in a hot sector. It was in a hot sector. XLC was your hot sector. The hot sector is below a 50-day moving average. It's no longer a hot sector. All right, so keep that in mind. No longer a hot sector. So when you're looking at these, you know, just keep that in mind. B. Stewie says you got to get on the backs of those whales, and it's so true. That's why we go through everything that we go to, because we want to see where the big money's going, okay? You can see them start to accumulate. We start to get in the faster moving stocks. We get to ride with those whales. Riding on the shoulders of those giants is what will make you money, all right? So in final thoughts here, folks, we are pulling back in the S&P 500. Sure, we have gotten a few rally days, but no follow-through day. If you don't know what a follow-through day is, you need to learn what that is. I have videos on it. I put one in the comment section. There's Google. There's AI. For F's sakes, if you guys don't know what a follow-through day is, by the end of tonight, you don't care. You do not care about investing, making money for yourself or your family. Find out what a follow-through day is. Learn what a follow-through day is. After a rally day, 4 to 7 days afterwards, we want to see higher than average volume pickup on a single day, pushing this market higher. There has not been a new bull market without a follow-through day, okay? It's that simple. There has been follow-through days that have been failures, but there has never been a follow-through day that hasn't led to there has never been a bull market that did not start with a follow-through day. So, with that being said, we have broke the 200-day moving average. Sure, we bounce back up. Let's keep our fingers crossed. I am always trying to stay positive, but this market has to prove itself to me and my family's money before I start investing in this. The only thing I'm going to invest in right now is long-term. Why? Because it is on sale. If I'm going to buy and hold for the rest of my life, I might as well buy it as it's going down. So yes, I have been buying the VOO for a long-term investment, but the rest is staying in cash. I'm waiting for the opportunities in the higher alpha moves, the moves that are going to take my money and make me more money faster than the overall S&P 500 will. So I have my swing trading account, but I always have my long-term investing account that I am constantly dollar costing averaging into, so that way in the timely manner that it heads lower, I can buy more knowing comfortably that I am getting it for a better future price. With that being said, folks, I hope you guys had an absolute awesome night. And just before we take off, MDGL was brought up by your boy, Yosef. Yes, Yosef, this thing is looking pretty good. Let me zoom out here. So new higher lows are being put in on this daily time frame. MDGL, I need to see the... Let's see this here on the... So it moves 5.5%, and this has got a humongous base. So what I do with these things, because I have such a big base on this, is I'll set my alert, completely forget about it. And once it gets above this, if I see it get above this on much higher volume, then I'll be interested. But until then, it's probably going to hit my alert. I'll reset my alert. Hit an alert, reset the alert, and just until this thing really gets to moving. Dan Bob says ASTS has a runway of 4 years. They're in good shape. Ooh, I like that. And when you say the runway, I'm assuming you're saying their cash in hand. They got enough money to keep on going for another 4 years. Their burn rate is well. That is a good sign, folks. That means they won't dilute the shareholders anytime soon, or at least that's the thought process. If they need something that bad, they'll file just like anybody else. Yeah, absolutely. Yeah. Look, Dr. Fell, I'm telling you, when I first started years and years and years ago, I wish I had an amazing charting platform like Stewie does. And if you guys want to use the charting platform that I like to use, that Stewie likes to use to draw all of his patterns on, you can check out my link tree. You'll get 15 bucks off. And I think the first month is free. Just click on my link. That is Trading View on the link tree. I would appreciate it. I get a little kickback from it. But yeah, I wish that I had the resources that I give to you guys, a compact show that I give to you guys when I first started, because it really gets you in tune. It helps you understand the market. It helps you process the market in a way where you can easily understand it. Those new higher lows, new lower highs, it helps you understand who's in control, the bulls or the bears. And if the bears are still in control like they are, then we need to stay out of the market, wait for our proper opportunity, unless you're seizing opportunities in those gold stocks, in those healthcare stocks right now. What are the themes to watch heading into next week? NASCAR all out. The themes to look for right now is, where is the money flowing? Which sectors are hot? Right now, we're looking at gold. Gold's hot. China, excuse me, China is very hot right now. And your consumer staples is still doing pretty well. So just keep that in mind. There's more of a flight to safety, but what we're waiting on is to see what is the next theme. What is the hot sectors? Of course, maybe something won't stand out as well as AI did on that last hot sector theme, but we will see new leaders emerge. We might see a new theme emerge, but we will see very, very soon, because this market, in my opinion, will not be held down for too long. I don't think we're going to go into a new one of these, although it very well could happen, but we will make sure that we are staying protective of our accounts if it does. I really appreciate everybody being here. Until Wednesday, make sure you guys got an X account. We're going to end this poll. Have we bottomed? 23% said yes. 31% said no. 46% said no idea, but here to learn. I'm here to learn too, and I appreciate everybody being here with me. Love you guys, and stay until the end. I'll give you one more shout out. Peace. There we go. Microphone. Good night, Zamora. Thank you, B. Stewie. Oh, I'm sorry I'm coughing, guys. Jimmy Bright, dude. It's good to have you in here, Jimmy. I didn't think you were here, Jimmy. I almost cried. I was going to have to cry myself to sleep. Dr. Fell, thank you. Thank you so much for being here and being a big part of this. Yosef Nadayo, what's up, man? I haven't seen you in a while. Good night, brother. Thanks for stopping in, Yosef. As always, dude, I really appreciate you being here. Erica K, take care, honey. Hope you have a good night. Carl Burr, Annaliz Godoy, thank you guys for sneaking in here and saying hello. Sadim Smaid. I don't think I'm ever going to say that right, but I really do my best. All right, guys. Well, I hope you guys have an awesome night. Thank you guys so much for being here. More awesome stuff to come from this show. Listen, be patient out there, guys. Be patient. I promise you. 2 years ago, not even 2 years ago, last year, I'd still be trying to trade right now. I really would. Stay frosty, my friends. And of course, Norman Conklin in the building. Norman, I love when you show up. I love that your name's green. I love the star next to it. Thank you for being such a huge supporter of this channel. I hope you guys have an awesome night, and I hope you guys have an awesome start to your week. Peace, guys. Stay frosty.